Hello and welcome to another update video about Ethereum. We take a look at the latest developments here on the Ethereum chart. By the way, I'm gonna tidy it up a little bit, just take that box out, we don't need it anymore. Move that to the left, take those lines out just to keep it tidy a little bit. And then we take a look at the chart, right? Take that channel out as well, don't need it. Okay, and it looks suddenly a little bit tidier. So overall, you know, Ethereum still in the same or very similar wave pattern as Bitcoin. This hasn't been a case for a while, but I think with the FTX drop, things were all like reset, you know, and the coins had a chance to start from scratch together. What we currently see here, what is playing out, is still this inverse head and shoulders. Now you can ask, or you could argue, it's this head and shoulders inverse, yeah, this one, or even the large one, which is currently playing out here. We've been talking about that since the last weekend. Big right shoulder though. But yeah, I mean, we had these possible reversal patterns, plus a short-term bullish Elliott Wave count, and currently the count is following that, or the chart is following the Elliott Wave count, which is good. Overall here, what you need to know with Ethereum is still that we can generally focus on further upside as long as we're holding above $1,000. That's really the main level, because below $1,000, the chart context flips bearish, all right? Until then, we have to deal with this sort of short-term bullish pattern where we're saying, well, it's a corrective pattern, first of all. It's not necessarily bullish, but just short-term bullish. Because from this low on the 9th of November, we moved up in what I believe is a wave A. We came down in a B wave, and we're now moving up in a C wave, in a 5-wave move. This could, of course, become something bullish if we say that maybe the bear market low was in here. Well, it would have been in June, wouldn't it? June at $880, and this local correction was finished here, and we don't see another 5th wave to the downside, but there's currently no way of knowing that, which is why I think from a strategic point of view, it's fine to play this uptrend in long trades, and then just to be aware that the retracements, or the retracement which is going to follow as soon as this pattern is full, is going to tell us a lot about the next few months in crypto and on the Ethereum chart, because the retracement, depending on how sharp and deep it will be, will tell us, are we in a wave 5 and are we making actually a new low, or is the move up a wave 1, an impulse to the upside that indicates the trend has changed, and the retracement is putting in a higher low, basically a wave 2, which would be allowing us to push up higher in a wave 3. And if we hold support here, then this will be a strong case that we can make for the low for Ethereum was in. Okay, so very, very, very clearly. But generally, as long as we're holding the $1,000 level, I don't think we're going to see the June low again. But if we break it, then the upside potential is probably gone. Okay, just to be aware of that. So if we take those lines out again, what is important, I think, is most imminently is to focus on this. So I highlighted here already is a top in place. We just need to be aware of that, because if we now drop too far, the market has a chance to reverse from here. It does, because it could be the pattern. There is a pattern which is full. We can count this not as an ABC, but as a WXY. W, 3 waves, X, 3 waves, Y, 3 waves. 1, 2, 3 could also be just an ABC. WXY pattern could be full, and we could break down from here and make new lows. You just need to know it's possible. We haven't seen a reversal signal, and to be fair, I think there is no top in place, and the reason is that the move to the downside here, or the sideways move that we're doing at the moment, is rather corrective. If we had really a WXY and the pattern was full and we're going to come down, then we should see an impulsive sell-off to the downside. Now, I haven't seen that, at least not yet, but I'm watching this closely. I'm going to keep you updated about that. Okay, if we assume the primary expectation, which is the count that's on the chart here, is playing out, then we should hold support in this yellow box. And you can see how relevant this support box actually is, right? We've touched it 1, 2 times, 3 times now, nearly a 4th time actually. How is this support box calculated? Well, it's based on the length of the third wave and the retracement. So it's between the 50% fib level and the 38.2% fib level. That's the ideal target for a 4th wave. So anywhere here, it should stop if it's a wave 4. There is no case currently to be made for, wave 4 has bottomed yet, because there is currently no, let's say, bullish reaction coming. So it could very well drop a bit lower here, maybe to the 50% fib level at 1256. But it shouldn't drop below 1256. If it does, then it's most likely either that we have a top in place, or this entire move to the upside can be not counted only as 3 waves, but as a 5-wave move. That's the second bullish option. So the first bullish option is here 3 waves up, but you can also interpret it in a way that you say, okay, this is actually not 1, 2, 3. It's actually a 5-wave move up. It can be counted like that. And then you've got, to keep it simple, I don't want to confuse you, but to keep it simple, we then have a 1, 2, 1, 2 setup, and we can drop a bit lower. Wouldn't be a problem as long as we're holding. Let me just show you. As long as we're holding above the 78.6% retrace, above 1185. So to keep it simple, we've got key support at 1156. If we drop below that, 1256. If we drop below that, it could drop down all the way to 1185. As long as we hold that, we still have a chance to rally in a 3rd wave. If we drop below 1185, it's going to get tough. Then we're probably going to test 1100 and 1000, and then maybe even lower. So these are the 2 key levels that need to hold for imminent bullish potential: 1256 and 1185. Now, how in the very short term can this play out? Well, in different ways. To be honest, a very compelling option here, because it's a wave 4, would be a triangle option. We say the wave 4 here unfolds as a triangle: A, B, C, D, E, and then the wave 4 would be finished here, and it would eventually break to the upside. That's of course a bit speculative at the moment, because we only have really seen a wave A, B, and maybe C. But this is certainly something that in a wave 4 is quite likely. And this would mean that the wave C should be finished now, and we should break out, or not break out, but we should move up in a wave D now. Important would be that the wave D stays below the B wave, so it should stay below 1304. Yeah. Just for fun, we can calculate the ideal target for the wave D, but this is really speculative because there's currently no real evidence that it is a triangle. But yeah, ideal target would be 1292 for the wave D. Okay. Because this could easily just be an ABC, and we come down a bit lower in the C wave. So if we drop below 1263, it's not a triangle, I can tell you that, because then we take out the wave A low, something that the wave C shouldn't do. And then it's most likely just an ABC or something more bearish. Okay. But important would be for imminent upside potential to hold this box, which we seem to be doing at the moment. And generally, I think we should see one more leg up, because the price action at the moment is fairly corrective. We don't really see impulsive price action to the downside at the moment. That can of course change, and if it changes, I will of course make you aware. Yeah, okay, and that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.